let's say you pique the interest of a fund or a founder or a partner, what actually happens then? Like, how many meetings does it take to actually raise around, and what does that different process looks like? What do you actually do in multiple different stages of that process? From I assume you start with an associate, so somebody who doesn't have power to basically decide whether or not they're going to invest, and then where do we go from there?
Yeah. So I think the one thing worth noting here as well is different firms work very differently in terms of process. And also, I think there are now a lot of firms which tend to be partner only.
Okay.
So that's the style. They want to interact with the founder from day one. They want to run the entire process. It's sort of less reliant on this hierarchy and things like that. Some firms still have the structure. I don't think there's any, per se difference in how it would work. But in our firm, we do have associates. They might meet companies, like I said, at events, doing outbound, might have the first call, and we review deals on a weekly basis.
Okay.
So as a team, and across the offices as well, we're looking at every company that's been met by any one of our team members on a weekly basis. And then on that list, what we're looking for is we've got our idea of flags. Like, this is not going to work. For example, founder ownership already at 40%. How would this work from a deal structure perspective?
Okay.
Or they've raised too much capital. They've already raised 20 million to date. No way that we could do around here. So some of those obviously fall off. And then of the remaining, depending on where, what bandwidth we might have, we then start to allocate and say, okay, we're going to run with this. And usually, at least at our firm, it's a two-stage process. And a lot of firms have this kind of a process where the initial stage is to get past the sort of concept or idea that this market is interesting and this company within this market is interesting. And all the partnership, usually in our case, the whole partnership is involved in that discussion. We get some feedback. We go back and we run the process with the company to trying to dig in. Some questions might have come up about their go-to-market perhaps, or their exact ACV and how that's shifting. If it's more at the seed stage, there could be other questions about gaps within the management team, how they're going to fill that to build out the company. And then we'll work with the company to understand their thinking on those pieces specifically, and preparing up to the IC. Again, a lot of VC.
That's one of the things that I didn't know even existed. You kept telling me, like, we got to prepare you for the IC. We got to prepare you for the IC. So essentially, for people who don't know, IC is like a investment commitment committee within the kind of fund, and then basically the entire company decides on your fate. So Pratima might be very interested in Treblle, but maybe 5 other people from the fund are not, and then nothing happens. So could you walk us through the IC meeting? What happens then, and why is it so important?
Okay. So the investment committee, as Vedran alluded to, is essentially where the decision is being made, go, no go. Should we invest in this company? Should we invest on these terms or not? Typically, all the partners in the firm are on that investment committee, and whoever the sponsoring partner is. So basically, in our case, in the case of Treblle, I was the sponsoring partner. So I've prepared the company to pitch our IC. They come in and they go through their entire pitch deck and the proposition and what their ask is. And usually that investment committee meeting right after that pitch is just the partners deliberating on whether or not we should move forward with the investment. What I would say is, and I think this is one of the things that you and I discussed as well, once you've reached that point, is it in the bag? Is it just a matter of sort of,
Is it a formality?
Is it a formality? No, it's not a formality. I think, but in seed stage, I think a lot of trust actually exists between the partners, because there is not a lot of data. Okay, so whoever the sponsoring partner is, the assumption is that a lot of work has been done to understand both the risks and how we as a firm may also be able to help the company mitigate those risks. So there's very little sort of real ways in which another partner would say, no, there's like no way in hell that we're going to do that investment. So we've made sure that we've deconflicted. There's nothing else in our portfolio. So usually at the seed stage. At the later stages as well, I think if the numbers in terms of how you're growing, how fast you're growing, so there may be questions that are raised on the deal itself.
Mm-hmm. Like the valuation,
The valuation,
percentage.
the ownership, things like that.
So by the time you get to an investment committee, you already know everything, right? What's the valuation, how much
Yes.
money you're putting in, everything. Can you change that after, like, if the investment committee says, hey, we want more money in or less money in, and do you go back to the founder?
Yeah. So what usually happens and what we tend to do is when we're doing these pre-pitch meetings with the founders, we spend a lot of time telling them, for example, let's say you came to us and asked us for 3 million. We have to agree a range. Mm-hmm. We can't say 3 million is what we're going to go and ask the investment committee for. So within broad parameters, and I think a lot has to do with what you want to put that to work with, right? Mm-hmm. So would a little bit less work? Would a little bit more work? Probably. So we do simulations along with the company to see the shape of the deal. And it's usually within those parameters. And even if the investment committee discusses it, I don't think it's broadly going to be outside that scope.
Nice.
But then we go back, we actually prepare the term sheet, and we deliver it to the company.